with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. Than you've ever been.
See what's happening. Sorry, my mic was out. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable part. Thank you for doing your part to come on into the live, and let's see what's happening in the charts. My cat wanted to join me again tonight. Hopefully she doesn't bother me too much. Let's see. So yesterday we got the breakout above this level, bounced up ironically to this fib level, the 0.5, and got immediately rejected. As we were saying, the cloud resistance on Momentum Master was a bit thick on the 4 hour, as we were pointing out, so we were looking for like that double top situation. it did manage to maintain this range, although we're making a lower high on the 15 minute here. Is this going to maintain and spike up to the next channel? Let's look at the liquidity and get started right with the liquidity right here. So we're going to go right into the 1 minute. Let's take a look. We're getting warmed up now. It's like 4th day in a row. So if we look here, we spiked up. We went and grabbed the 165 million that we were talking about to the T. Let's just zoom in a little bit more in detail to give you that. So they got that 165 stacked liquidity range around here. All these bubbles of shorts that didn't pay themselves from this point got popped. And they went up a little bit higher to knock out the 118 million here. And they immediately came back and ate all of these longs. And then they stabilized and reached back up, and they induced some more shorts in here. So that looks like what we're coming back to get is around this region at 2365. At 2365, we're going to see at least up to here where they're going to try to knock out these guys by the looks of it. Off the initial scan of the liquidity, we're still imbalanced to the shorts by 4 billion. And yeah, we got 170 up here at 2365. Let's go see where that coincides with other confluence, i.e. fair value gaps and whatnot, Fibonacci. So we'll come back to this. You also have some liquidity that opened up here that further stacked this region. And this region is, well, stacked in a thick manner with a lot of liquidation points. Clearly you have more by the volume here. Cumulative volume of the liquidation is higher up in this region at 24K. So 24K could be on the table. You do have a sparse zone here, but yesterday you had that sparse zone, and then we spiked right up and grabbed what we were aiming at. So are they aiming at this pool right here? Let's find out. Let's go into the charts. So that 24K region would put you up in this region. It would put you beyond the 0.5 into the 618 region and the 0.5 of this other bullish projection. So it would get you out of the bearish scenario and start getting you into the bullish scenario on these diagonal fibs. What are these diagonal fibs and why am I using them? I used to use them back in the day, and one time I traded off them expressly from 706 to 706 to 706 to 706 on smaller time frames, and it seemed to work at a certain deviation level. And yeah, you basically take the rise, the retrace, and it gives you this fan which shows you the mean reversion and where it would get overbought, or where they would look to scale out of a position and come back to these red reversion zones. And so it kind of gives you like an average over like a premium and discount level. And so it would give you an idea for the premium and the discount of these as it comes down. It's just an interesting thing to look at, and sometimes you get these ascended channels that kind of fall in lockstep with the diagonal fibs, which is kind of eerie. It follows it this way and then it follows it that way. So I think the algorithms use these in some way, shape, or form. I still haven't figured it out 100% just yet, but it's cool nonetheless. So we go to the 12-hour time frame. And we spiked up, we came down, hit this, and we're just chilling in this channel. We already did the diligence last time, but we'll do it again where there's liquidity down here. But how is it stacking up on the higher levels here? We already indicated that on the 1 minute time frame that this region looks pretty juicy in terms of how much it's stacked right in this region up to 24.2. And yeah, just comparatively speaking, there's less down here, and your cumulative liquidation delta is still 4 billion. short liquidity imbalance. So let's go to a heat map and take a look at the different time frames once again before we go into the fibs. How's everyone doing out there? Yo, yo, yo! Thanks for stopping on in, everyone. Is it delayed? Okay, it's like... Interesting. Alright, so we skipped the 12-hour time frame. We're going to go right into the 7-day. Alright, so clearly you got more on the upside here on the 7-day. You see by the heat map, this is each of these heat signatures is in the yellow is over $3 billion on each range, and you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 times 3, you got like 30 billion in this region here, and less on the 7-day down below. We're not going to go into the exact numbers. You can look at that on your own accord, because we're going to go to the 1 month and 3 month. Those have been the things that have been piquing my interest in terms of how much they have stacked down here at 20,006. So once they get what they come for, whatever it is up here, I expect some sort of sharp retrace to grab this stuff at some point. So you got single digit billions in here on this time frame. You got 50 billion up here in the 25k region on the monthly, and on the downside you have significantly more down here in the 10 billions. And then if we get to the 3 month, this was the thing that was getting hotter down here. So you're getting like 50 billion down here at 20,800, nearly 50, $47.7 billion. You got 40 billion down here, 40 billion, 38 billion, 33 billion, 30 billion, 20 billion, 23 billion, 24 billion, 30 billion, 16 billion, 17 billion, 30 billion, 47, 36, 29, 13 starts to get sparse at 21.4, but just this real thick region of long liquidity right here, and significantly less in this region. So they've been building it up over this 3 month time frame since January. A lot of longs looking to get snatched here if it does pull back down into that region. You have to juxtapose these different time frames because these pools take time to build under these different time frames. So there's no consolidated time frame pooling that's done with their platform here, but it's still nice nonetheless. So here you got 60, 40. It's the same thing as the 3 month, just less hot looking because you had this heat by comparison that they came to get, which was 100 billion. So yeah, and it tells the scale is different. 100 billion equals over 100 billion is yellow, so it just gets less hot because it equals less liquidity. And the other thing, that why are we staying up here when you got all that liquidity below? Well, here's the time frame that has the SPY balloon hovering above us with short liquidity here, which you have $174 billion at 25.6, 96 billion at 26k, 72 billion at 26.4, 114 billion at 26.8, 73 billion at 27.2, 116 billion at 27.6, and 70 billion at 28k, and so on and so forth. You got a lot of liquidity holding just above us on the yearly time frame, and all of these shorts have been open all the way since August 14th, some of them, and even further back in June, some of them. You can see the liquidity getting hotter from that time, like they left it open that entire time. So these shorts at some point will get popped. How much of a retrace down in to the liquidity down here to recharge to go grab it is the question. Is this enough right here to go up and grab it? Only time will tell. So that's what you do when you juxtapose these liquidity pools. And always be aware of what's above on the yearly. So why are we hanging out here? What's the interest? So it's, why wouldn't they just come back immediately and grab this with a wick? Well, there's a lot that they're paying up top too that doesn't get reflected here on this time frame because it's a yearly time frame pool. Hope that makes sense. Let's go into the charts and take a look in more detail. All right, so on this retrace down on the 12-hour time frame, you had a 706.65 618 region that we got rejected off of. In essence, if you look at the candles here, we're going to go to 6 hours to show more precision. You got the rejection off the 706. We came back, we bounced off, we wicked up beyond that point. That was the pool that we were talking about yesterday, and then we immediately spiked back down, and we've been seeing these rejections off the 618 here at 23.536, and this also coincides with the bearish trend-based fib extension tool, which shows the 0.65 or the 706 here for where we are getting possibly rejected to go down into these gaps and bearish projection and the 6.5 of this retrace here. So this, we got wicked off the 618 here. That's where we found the liquidity grab that we were talking about when we first started streaming this week, and then we caught it every step of the way here. So can we catch this next step in the phase of the liquidity grabs? Let's take a look a little bit more in detail. So these levels look pretty solid. You got the 236 for the bullish projection, which would take you up in this region and would eat into those pools we were talking about into the yearly. But you got some fair value gaps here that might reject you as well. But generally, if you stay below this bearish scenario can be in play. Alright, so one thing that I was noticing just on my phone before I went streaming was on the hourly, we had some money flow hidden bearish in a sense, because you had the money flow flowing up at this angle, and then you have this kind of going down on you. This was kind of like hidden. You have the money flowing in, yet we were barely able to hold, so that's kind of like a bearish divergence. Even if you go from here. My friend's trying to call me. I gotta call him back. Can't talk right now. So, yeah, I mean, this money flow flowing in, and then its disparity from the RSI generally comes back to the RSI. That's what I was putting out in the Momentum Master Discord. I was saying this looks a little bit weak. The money flow is flowing in, but it's not really taking it that high. So that was the first thing I saw earlier today. This was where I posted it. I was talking about, check out the money flow deviating up on the hourly on BTC, expressing a struggle, possible hidden bearish. So is that what's playing out right now? This is also the bearish 706 level. Before we get to that time frame, we got to start from the higher time frame. So First of all, let's just go. We didn't ever go over the weekly candle close, so let's look over that. We got tweezer tops on the weekly. We got tweezer tops, strong tweezer tops on the weekly. Are we going to see a retrace into this region to see some weekly retrace, which we haven't really seen much of? We saw 2 weeks of it, and this is the third red candle in so many weeks. So let's go to one with nothing on it right now. So that would be like the proper retrace zone for a larger, healthier pullback once we tap that 25.6 and we reassess whether we're going to shoot up again. This would be once the rally's over, we would go back into these regions here. So that's a long ways away from now, so we're just concerned whether we get the pullback to here or not, or here. So on the weekly time frame, let's look at the stochastic data. So you got overbought on the Williams. You haven't really had the time for the average of it to come up enough. You still have room to go up on the money flow. The money flow and the RSI are staying healthy within one another. On the weekly, you could be seeing this gap up. So look at it. What are you doing, huh? You want me to pay attention to you, huh? So this could be double topping up here, and then we come back down. But overall, on the weekly, we already know that we're kind of getting overbought on the weekly time frame. But the 2 week also getting overbought. We have the rising sun on the Williams that started to play out down here. So the last time the 2 week kind of got overbought, and you had that Williams high as well. That's when we had the big dump. So the Williams is one of the things that tells you if you still have room to push up. So when you have the Williams on your side, it can push up even further, but the 2 week is obviously a larger time frame here, so you don't really have much data to go off of. But when you have this getting high, you had this kind of reset, but we still had this coming up and pushed it up from there. So we're just getting started on the Williams here. So we could pull back and then continue higher just based off of the Williams amount. The last time you had a rising sun was back here on March 2019 at $2,750 Bitcoin. So it's been a long time since we've seen that rising sun scenario. Interesting note on these higher time frames. We have the monthly candle close as of tomorrow's candle, and the monthly has reset nicely, and the Williams is in a nice position, which it's never been in because it didn't have data to even show that. So the Williams is in a nice cross position. You're getting the upward momentum push on the monthly. So that's interesting. If we can hold this candle even as a doji, it's going to probably bring up some of these crosses into fruition and activate a lot of algorithms. So we have 10 hours for that monthly candle close to see where that leads us. And dropping below into the weekly time frame now. We already went over that, stochastics. And going into the 3-day. 3-day ends in 2 days. Let's go to the 5-day real quick before that. 5-day and also 2 days. So the 5-day and the 3-day end in 2 days. What are they at is the question. So the 3-day has reset nicely, as has the daily. It's the weekly that's not particularly on your side. How's the 5-day looking? 5 days overbought as well, alongside the weekly. So let's go to the daily time frame. So we had the stochastic reset of the daily in a good manner without giving back so much price action. We had that bearish divergence play out multiple times from here and here on the money flow and the RSI. We're getting that curve off the 50 kiss on the Williams, which means it could curve here, it could drop down and get some liquidity first and do a full reset too. It could fake you out. It's not the optimum position for the Williams or this at this 10 point. It could be just inducing more liquidity to the downside. So we go to the 22 hour, my discovery, which other people have found to be useful. Back testable time frame of the broken time frames. I want to get into how the broken time frames, let's go into how the 22 was discovered, since I was looking at, money flow and momentum and how it flows with things, and I was looking at how candles basically create these stochastic resets. And so back in May of last year, like around here, here's where it was. So we had these like surges up, right? We had these surges and these double tops of the daily. Okay, so we had these double tops of the daily, right? And so why did it surge up here with the daily at 72? It was like perplexing me to no end. I was like, why is it double topping here? And I found when I switched to candles, so the way the 22-hour works is that it has a 22-hour candle and a 2-hour candle, and a 22-hour candle and a 2-hour candle, and a 22 and a 2-hour, 22, 2-hour. And within that data, formulaically, it resets the probability. And so the probability for a boost got low on this broken time frame. I call it broken because it doesn't follow a coherent time structure. It's 22 and 2. It's like having a broken rhythm, like 11-8 or something like that. It's like this weird unsyncopated rhythm, which causes the turbulent flow of the momentum to get reset into these pockets, these swirls of probability, which end up playing out. And I was like, that's really weird. And then I noticed it did it again. But this was when the Luna liquidation event occurred. And so I was like, that's quite fascinating. And we found this kind of thing with the 22-hour and then the bullish divergence, and we were able to use it multiple times. And then when the daily was still high at certain regions, we would get more data from the 22-hour. So it was a fascinating discovery. It's nice to see it starting to take off. It'd be nice if people gave a shout out about it, but it is what it is. So yeah, let's look at the 12-hour time frame. So we know that the daily has been reset in a nice manner, although the Williams, just to reiterate, the Williams has not fully reset completely yet. You're in a high state after 50. We have seen bounces like this off the 50. We talked about it on the hourly yesterday, but that might not be a sustainable thing. It might need to come down again. But a bounce is a bounce is a bounce. So that's what to expect from that. My cat, see, this is why I don't want my cat to come in. She wants to get out now. All right, so cats are pretty cool, but they get clingy at night. All right, so let's see. So the 12-hour time frame. So we've been seeing this 12-hour get steadily moving up, getting overbought, but we haven't had such a solid move just yet. This could surge up and go grab some higher liquidity. You never know. You're getting the Williams come down. We talked about how this was not in your favor and you would see that suppression perhaps, and it wasn't really playing out in such strength because of the Williams coming down on you like that. So you're getting that possible suppression from the Williams still playing out on this expression being massive. And that's why we've been kind of saying that it's going to get resistance on clouds and stuff, is because you don't have everything in the go position. Like when you had this in conjunction with this, that's why I was dead set on upside here, is because these were in congruence. This is not exactly in the congruent path, so that's why it's a mixed signal, and mixed signals are less guarantees. So the 12-hour is going up slowly but surely, but you're kind of meandering back down, and it's struggling to go up here. You had the money flow come out, and then the money flow is starting to come back above the RSI again. When they deviate apart from one another, they like to come back to one another. So if it gets too high above it, it'll come back down into the RSI. If the RSI doesn't, similar to here, it goes up above the RSI and then it comes back to it. I've noticed if it goes beneath the RSI, then it goes back up to the RSI. The RSI moves more slowly than the money flow. The money flow index is better known as the volume weighted RSI, in case you haven't noticed or knew about it. This is what they call it, the volume weighted volume weighted RSI, and that's the money flow index. It's the only money flow indicator that goes between 100 and 0, and divergences play out. So you get money flow divergence and it surges up. So it's a very decent indicator for money flow. And yeah, so we're looking at that kind of coming up above the RSI on the 12-hour time frame. And if we look at the 6-hour time frame, you see it's kind of coming up above the RSI as well, kind of expressing a struggle, even though it's not going higher. You're getting the money flow coming up like that. Same thing happened here. You got the money flow kind of coming up above. And then we did end up surging up here, but then you got bearish divergence and came down. If we go to the 4-hour time frame, we overlooked the stochastic. So the stochastic is getting overbought as well. The Williams hasn't really seen itself going up with conviction just yet. They're not opening up in this manner. And you could, finish the expression to the upside one more time. 4-hour. So now we're going to juxtapose something with the 4-hour. We're going to put on the higher time frame and lower time frame stochastic RSI. So on the 4-hour time frame, you have now the daily came beneath the 4-hour here. And so now you have hourly expression plus the curvature here. This is kind of curving, right? So this is curvature of the daily. The daily is starting to become a support structure for, instead of downward momentum, which we were having back at this point, it's starting to kind of thin out and come up. And then you're seeing it get kissed by the hourly time frame. This yellow orange is the lower time frame, which is the hourly from the current time frame we're in, which is the 4-hour. and this came down into the daily and got kind of supercharged by it. So this is why having these interactions between the time frames is kind of interesting, because you can see where they kind of interact with one another. Similar to having slits in a wave pool and the water goes around it, and they kind of create these turbulence, and these turbulence kind of like interact with one another. So it's kind of it could cause this itself to curve on the 4-hour time frame. So you could get the 4-hour to kind of curve up by getting it sprayed like a hose of water, spraying up at that downward momentum and kind of curving it back up like a wave. And so you could see the 4-hour curve at this time and go up. So that's interesting. You're starting to get the daily possibility on your side. Really quickly, I'm going to go to the daily and see how that looks with just Momentum Master B only. So you had the daily kind of come down. You see how the daily got overbought? It hit the weekly, which was also overbought, and it just came down. Same with the 4-hour. It came up to the weekly and got dumped down. So the weekly is kind of curving in an upward manner where the daily could possibly start to push this up more too. So that's pretty interesting interaction. I haven't looked at these in a long time, but it's interesting how they interact, especially if you know which time frame is showing you the higher and the lower. So this is the weekly time frame. So the weekly time frame could come up here to finish itself before coming down or whatever. And that could come off of the daily, and the daily could curve the 4-hour here, and they could work in tandem to curve the weekly. So you could have a bullish week just off of looking at this alone. So going back to the 4-hour, you could get this curve up on the 4-hour from the hourly and the daily working in your favor. You have a cross up on the leading MACD as well. The Williams came up and is creating kind of like a cup and handle kind of thing even off the Williams. Interesting to say nonetheless. And we're going to look at the hourly. So the hourly is starting to express itself and getting overbought though on this, and you have it's doing its damnedest to try to curve this 4-hour. The 4-hour is coming down, and they're trying to curve it gently and using up their probability to stave off the dump from that. But in doing so, it kind of reset the Williams in a way, because the Williams was overbought here, and now it's kind of lower. So even though this is getting overbought on the stochastic, the Williams is still kind of low. Just something to think about. And go to the 15-minute. So the 15-minute is coming down again. You're getting across the Williams and the MACD. So you have the 5 and the 15 and the 30-minute all kind of coming down in a reset formation, and you're getting a Williams alert. In those cases, it wants to reset more. So what's happening on the 15-minute is you're getting a reset here. So you'd wait for this 15-minute to come on down. Let's see what liquidity is going down. So they're going. Going to grab these guys maybe. So they're resetting this. You got bearish divergence on the money flow here. You had the money flow bearish divergence from here to here. You had a higher high, yet it was maybe class C. So you had the money flow divergence starting to flow out, and then you're getting a reset of the 15 and the 30-minute possibly. So we're going to turn this off now. I think we got an idea of how the time frames could possibly interact. And so you can get a clearer picture of the other components here. And yeah, let's turn on the ultimate and see where we're overbought and oversold. So if you have an alert on your phone, you can get these alerts that play out where it tells you you're getting like 1 or 2 time frames oversold, and this would have happened like 3 minutes ago. You would have gotten this overbought, oversold message, and you could judge, if you haven't been in the charts, if that was where a region where you were looking to get in. All right, so these arrows are showing cumulative volume over the time frames, and if it's positive, if it's flowing in, net flow in, then it's going to appear beneath this, and the arrow will adjust in length accordingly. So you had a lot flowing out, which is why it started to struggle, and now you're starting to get some flow back in, but it's not significant. So you had significant flow out, it started to drop. You had some flowing back in. We were talking about the idea of hidden bullish here because it was holding off the selling. So this is holding off this selling as well. So that could be kind of like a hidden bullish with the reasoning of going to get this stacked region, or this region at least. So looking at the hourly 15-minute. Whoops, let me turn this. You're just seeing like a consolidation right now. There's not really any like pattern or structure. They're trying to play with, they're pinging both sides of the coin right here. But if you were a scalper and you were just sitting in front of your computer all day, you could just do these crossover events too on the A. That's where we didn't have on. We didn't have the A on. Something didn't look right. So there we go. So we have the A on now. So we got the cloud in conjunction with it. So you're getting this kiss of the cloud and the thinning. This is what we like to see when you see this thinning of the cloud and the cloud kiss, and you get these signals. You can get these bounces off the cloud and continuation. So with that in mind, you could be seeing like a kind of inverted head and shoulder kind of out of here off of this cloud idea. 15-minute came down, as did the 5-minute. And then sometimes it interacts with the MACD, which is weird. Like the MACD is this thing that traverses between both realms, and yet it still kind of like interacts and gets momentum crossed down on it. But I digress. But yeah, when you get these thinning of the clouds, that's key points where things happen. Key points where things happen. And then we were talking about thickness, right? So yesterday we had thickness of the cloud just above us, and I said, you know, look for a possible rejection. Like you can go back and replay it around 45 minutes in. I was saying like you got this one tap, and then look for, and I think it was like at 8 something, I was saying look for this to come down. And sure enough, we did that because this is thick. This is a thick momentum that needs to curve, just like it needs to curve on those smaller time frames. You get that curve, and then they break through it as it starts to thin. You break through it, and then it comes back bearishly, retests that cloud, and then continues down to the bottom of these channels. So just as if it wants to go up to here, it can't just immediately do that. It has to shift the momentum on this time frame, which is extremely downturning at this time. So that's why you're getting that rejection off of that. So is that always the case? Like, did that happen here? You kind of broke right through and then bearishly retested. You did come through it here. Not always the case, but for the most part, you start to see it thin, or you break through it, and then you come back and you retest it. And then by the time you come back to retest it, it's thinned a bit. So you break through, you come back and you bearishly retest and continue. So these this is pretty thick for just something to surge through and just go all the way up to here, you know. So like the idea of it just going yay doesn't really make sense to me based off of what I've seen in the past. So it would do something like, you know, if it breaks out, it would come back and then go. So that's basically why I was saying, you know, don't expect that to last long. And so you're seeing this again, this rejection at the cloud on the 4 hour. Now, with that in mind, because we didn't have these up on the other time frames, we go back to the other time frames and see how the clouds are. So you have that same cloud idea in mind with the 12 hour, which is pretty strong. But on the bottom end of the channel here, you're at the bottom of it. So are you bearishly retesting this to break down and start it to curve? Because it's starting to curve here on the 12 hour. You know, are you kind of doing something like this where it's still thick, but it starts to dump and then that curves later? It takes more time for this to curve than lower time frames, that's for sure. So is this the time where you reach the top of this and then get rejected out of it, similar to here? I have no idea. But interesting nonetheless. You can go back and juxtapose those. And the 6 hour is still thick, so an immediate curvature and bounce through that. Like if you get through the 4 hour, let's say, like would you get through this one? Or would you just come off that and then bounce? You know, you get that rejection. So these clouds are really, really interesting tools in the Momentum Master suite to use as confluence for these regions, for where to take shorts or where to consider taking profit on a long. If you're seeing the thickness or you're seeing the thinness of a continuation to the downside, for example. And so you got this thickness here, and it also confirms on these Fibonacci levels. You know, you got that Fibonacci of this impulse to the downside happens to coincide with the cloud. Just something interesting to note. And that's why we've seen this rejection here at this zone. And this finger, by the way, is just higher time frame suppression. You know, if you have it on your side, if you have higher time frame on your side or not in terms of momentum. So you have kind of higher time frame already telling you, showing you downside momentum. So the hourly, back to the hourly, we were talking about how it was overbought and possibly it was staving off the 4 hour, and then the 15-minute was getting overbought as well and coming down on you. But then we were seeing how the 15-minute could possibly have reset. All right, so these crossover events of these baselines that we were going over pretty thoroughly yesterday, I believe, and how they go beneath the price. You're getting that crossover event on the 1 hour. So that 1 hour the 1 hour event is crossing over, so we go to the 15. Yeah, and that's where we saw the kiss of the cloud. And we had this, and this is probably crossing down, possibly. And you got the Williams not in your favor, so the 15-minute could reset here. Sorry, I was out of the pocket all day today, so I'm just trying to get into the pocket of where price action is. I haven't seen this. This is the first time I'm getting into it all day. So we're at the 10-minute here. I like the 10-minute these days, but the Williams is coming down on you. So what we're going to do is see what the dollar's doing real quick and come back. So the dollar's dumping out of this bullish trend-based fib level of the 6.5, I believe, that we put out. And you're overbought on 7 time frames here. So if the dollar kind of dumps, that means like a rally for the markets could be in store. And we were talking about this kiss on the larger channel here for the S&P. And if we held this, then you'd see like a jump, a bounce for the markets. Yeah, because it went up and came down, so the actual impulse would be either from here or from there. So we got wicked into that golden pocket region on the hourly time frame. We got rejected off the cloud, we came back, mustered some strength at an order block, and we could possibly be coming up for the S&P as the dollar kind of fades a little bit. Why is it not showing the other one? That's weird. And so you're getting into an order block for S&P. So if the S&P is doing well, I don't know why it's not loading now. Why is this not loading? There we go. All right, so you had 5 time frames oversold. This looks more bullish to me. You got like an inverted head and shoulders. This is the head. They're doing the right shoulder about now for possibly a rally for the S&P, which would indicate bullishness for Bitcoin as well. You have 6 time frames oversold. This is kind of what we saw. This is what we were front running at the beginning of Sunday, I believe it was. No, it was my birthday, so it was Saturday. We were talking about the liquidity grab, and then we bounced out. So this is kind of like what Bitcoin was doing 2 days ago. So if we go back to Bitcoin here, it was like Bitcoin back here, right? Bitcoin was at 5 time frames oversold or whatever. You have resistance at the cloud. And then we bounced out. So you came back and you bounced out here. So this is kind of where the S&P is here. If we go to the S&P one more time, you see what I mean? Except we're beneath the cloud, but same principle. We could bounce out of here and then come back and retest off the cloud. But this could be a slight reversal. We're at the bottom of the Keltner channel, and could be trying to make a break above the cloud to thin it on the hourly here. And yeah, going to the 4-hour time frame. 4 hours just starting to curve in your against you in terms of a long. That's not so hot. times where it does that, that just indicates it's going to continue down on these 4-hour time frames. I mean, it starts to curve, and then you could see it go up and then go back down again. So this was a similar situation where it started to turn purple and we went up, but then eventually we came back down again. But pretty much every time you go purple, even if you surge up, you end up succumbing to the purple wave, and it doesn't shift immediately. So the fact that we're getting kind of a purple wave here is not so bullish long term, like you would get like a rejection and then continuation to the downside kind of thing. So you might go up here and then come back down as this starts to express itself more, and then how far do you go down is the question. So that could be something that occurs, you know, Thursday or midweek reversal day. I don't know, maybe you see Tuesday, Wednesday go up, Thursday come down, Friday continue, but it looks like it's kind of already starting to curve in a bearish manner. But the hourly looks good. The hourly scalp, we played the hourly scalp last time for Bitcoin to the upside, so yeah, where do we stand right here? So we got this kind of little mini inverted head and shoulders. This is the right shoulder, kiss off the cloud, kind of play up here on a 5-15 minute scalp idea possibility. We got the adaptive and the weighted moving average in our favor on the 5 minute. This looks like it's good to go. It might be going right now actually, to go get that liquidity that we mentioned up here. So they might be going to this guy at 23,650 at the bare minimum, 23,650. So if you just do, you know, I mean, here, I'll show you what these measured moves you could do. You could do the impulse, retrace, even on these small time frames, and it'll give you all that scenario here. So you could take these trend-based fib extension tools and be more precise with your measured moves by copying these settings here on the trend-based fib extension. Extend the lines to the right so it projects out into the future. Use your 236 for entry and the 786 as a resistance point potential. The 1 and the 1382 take profit regions. 21618 for continuation ideas. 0.65, 0.706 for other resistance points. And that would be where you would kind of see. So if we get above this 236 on this impulse, then this kind of inverted head and shoulders idea could be in play, and you would see this region 2365 easily taken. 2365 puts you right around the 1, so you'd be like right around here. Even though you're getting 3 time frames oversold, you have the adaptive flip in your favor. So you have the adaptive and the weighted moving average SR flip of those. You could see this continue to the upside for a 15-minute potential double top hourly scalp with the 4-hour curve with the daily support that we went over earlier. So yeah, I mean, at least to come up to this region where you get these shorts taken out. And that would also be your fair value gap if you didn't have, you know, high block. You just do this and you're like, that's interesting, it came down here without retracing back. That's a fair value gap. And it coincides here. Confluence. And the confluence region happens to be, you know, 23,682. What's at 23,682? 23,65. 23,67. I wonder. Indeed. So, yeah, that's how you kind of get in the pocket. Am I wrong? Am I right? I have no idea. That's why you always protect yourself. Piat, as my friend and I used to say, protect yourself at all times. Piat! Which would mean down there below the Keltner channel at 23308. So there you go. You could just do your risk reward ratio. You just say, I feel like entering. I'm going to put my thing here. You know, this is all for educational purposes only, of course. But you just say, let me see what I'm going to do here. Let's just do this. I like that. I like them odds. I like them odds. And you just go like this. Like, let's just say we're doing it. You go like that, and we enter, and then you go stop loss down here, take profit up here, and that's it. And let's just see if that funny thing plays out. Yeah, so yeah, you could try to act cool and then put your, like, you know, slide a pole over and it'll do the same thing. It's all up to you, you know? By the way, what we've been using this entire time is called Momentum Master. You can go through and toggle all of the tools and look at the what each component is in your own leisure at momentummaster.info. If you're interested, go ahead and take a look. You can toggle each component. This schematic was made at the exact bottom of Bitcoin before we knew it was going to be the exact bottom, so you can go see it at 15K and what was being displayed on Momentum Master at the time with the rocket ships and how it guided you out of that region on the swing trade. So that's pretty cool. Took a long time to make, so you can check it out. So that's Bitcoin. Let's see if anyone has anything to ask, to look at. What's good in the hood? Big Wick Energy, everyone. Thanks for stopping on in. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable part. Check out one Lego I ordered for my daughter, a genie. She's got some Aladdin stuff, so yeah. Anyway, I'm a dork. So, anything you wanted to look at while we're here in the clear? Vibe. Will do, bro Jangles. Vibe. USDT. Let's just turn this off really quick. Let's get the acre price action first. This is a daily time frame, so broke that, so if you include this range, it's kind of the 618 of this range, but I don't normally do that. I kind of look at impulse. But let's just take a look at the weekly and see if it comes into a weekly idea. So you got the weekly kind of starting to come down on you with the money flow. The Williams didn't get that alarm because it wasn't above a certain value as it crossed this average. But that's probably because the average volume is like 4 million. It's kind of lower, but I'm not going to get the same readings. Let's see what it looks like with this. You're at the top of the Keltner channels. You could get a bounce off the Keltner, you know. You could come back into the Keltner. Wow, the cloud's kind of interesting. It's like this weird thing that thinned out right beneath it. It's kind of interesting how these things look completely different on these smaller stuff. And then you're below. You haven't even got the curvature on that just yet. Maybe the adaptive on the daily. Not really seeing super signs of. Is this the right coin? Yeah, maybe. You're kind of getting like you have the baseline above with the adaptive above as well. It's kind of needs more support beneath it. For my liking personally, like back here when it was like getting above here and you had this daily above the adaptive, or you were flirting with that idea and you had the cloud beneath you relatively close, something like that, but the cloud is above you and the adaptive is above you. 12-hour time frame's cool. You got that crossover event on the 12-hour. So in terms of like just the scalp idea, you know, looking at it like, you know, this that Rainier special sauce of the falling wedge idea, like you got the adaptive on your side here. So in terms of a daily play, now you're starting to get something nice to my liking. You got the weighted, you got the baselines, you got the adaptive in your favor here. Like this is pretty cool. You got the crossover event, you got the 5 time frames oversold. Now we're starting to see what you're seeing. Now this is getting thin, like you can surge up. I got you. I see what you're looking at. You could wick down to the, I mean, this is not really a valid idea though. I don't do that, so I'm gonna just remove that. But six-hour too, you're kind of ping-ponging between them both, figuring out what you want to do. Ideally, you'd want to see it like that, with the cloud in your favor right there, and you go back and kiss the cloud with these beneath you. Like here's kind of like an indecision idea on the 6-hour. 12-hour looks cool, but you don't have that right behind you with the 6. And the 4 hours get below the adaptive and kind of coming back and flirting with whether it wants to go above it or bearishly retest down. You know, having it down here beneath everything, where you go back and you kiss it strongly off it and you come back and you retest it. That would be your like better play. Like it's showing that weakness again on the 4-hour, and that could be because of the daily falling out kind of thing. But Now you're starting to get some bullish divergence on the money flow here. So we look at the 1 hour here. Yeah, so I saw what you saw with the 12 hour. The 12 hour looked really nice. I don't know how I feel about. I don't really know what I feel about like other confluence here. Like if I go like this, we're beneath like some fib levels and stuff. Like it would have been nicer if it was like that, with that interesting stuff beneath you. Like now you're beneath the adaptive, so it's kind of like you could come back further potentially, like. But I see what you're saying about the like time frames and everything. Just I was looking at the daily. I like the angle, and you still have this in your side, ideally speaking, but it's now against you kind of by being above you. Like it would be like a bearish retest kind of down thing. But that 12 hour looks nice. I hope that makes sense. Yeah. Like I like this idea. Crossover. This looks really good. You're right, the bottom of the Keltner channel, and everything looks kind of like in your favor. So just looking at the 12-hour play and just see if it plays out, or at least just to go up to the cloud, and then that would still be like what, 26% on this coin. Hope that made sense. Nice. So, oh yeah. Anything else? Anyone else interested in anything? So you got the cloud in your favor here, and you got the reset of the 5 minute, or 15 rather. I'm liking the 10 minute these days, so I'm gonna go to the 10 minute. So you got this front run hidden. This thing I'm not sure how to incorporate just yet, but it's a multiple time frame divergence indicator. I don't know if it actually works. I've caught it to work once or twice. It kind of front runs divergence a little bit, but it's getting hidden bullish here on Bitcoin on the money flow. It is what it is. I don't know if that's true or not. That's why I haven't made that publicly available yet. But this is pretty cool. You got the weighted average on your side. The cloud's pretty thick. You're coming back to kiss it pretty nicely. Yes, sirree, Bob. Well, that's at least where I stand in terms of the liquidity here. Like going up to here doesn't seem that out of the question, does it? I mean, you got these little bars over here. You got more stacking up here. So we're going to just leave it there for now. I hope you enjoyed it. Thank you for coming on in once again, sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Make sure you do your part to keep things flowing and going in the right direction. Take it easy, folks. Peace.